from a real estate market side, I'm going to put some pieces together here. And then we're going to get some help putting the missing links together and seeing what can we do. Because the other thing that we have, if you're already investing, you've got equity. You've got equity in your existing assets. You've been, if you've had them for a while and you haven't already used it, you've got equity. What you don't have right now is bidding wars. You're not being forced to pay and outbid everybody who wants property because there are no properties. The laws of supply and demand have been huge in this marketplace, and we've had no supply. We literally ran out of houses in, I think, June 2021. My job is to help people buy investment properties, and they called me and they're like, I'm from California, I want to buy a house. I'm like, I'm so sorry, we're out of houses right now, but can I call you back in 3 months? There's got to be some by then. So our buying power and our return on investment is decreasing. When I show you some of the prices of the properties available, those are decreasing. Inventory and days on market is increasing. That's going to mean what? If you've got higher days on market, what's that going to mean?
You get to look around.
You get to look around. You don't have to buy a property and you only have one available to look for. You want a house? Great. Well, here's the one that meets your criteria. Would you like it? It'll be gone tomorrow. Let me know right now. Yeah. But also sellers are going to get motivated. They're going to want to sell. We're going to finally have some negotiating power. And buyers are starting to utilize that negotiating power. Agents are starting to say things like, yeah, I'll present any offer you give me. That's our job. You can't not present an offer. So they're basically saying, like, just write an offer, just give me something. Off-market deals are being considered. As I mentioned, that 11th Street triplex, they went ahead and they knew that buyer valued picking it off market. We've all been there. We've felt like if it hits market, it's already been picked over. If a buyer can pick it up off market, there's a value to that. And a seller a year ago might not have been so inclined to take that. They would know the open market might really drive that price up. And in this case, a buyer's a buyer. We're finally valued as buyers again. So contingent offers for people who actually need to sell a house in order to buy, they can actually move. They're allowed to move again. You don't have to, they were getting thrown out. But the big question is what lies ahead. So here's what I see when I log into the MLS. My agent view, if I run a search for single family homes in Meridian that were built since 2000, a snapshot of what come up. Well, first of all, there was a huge list. I wasn't used to seeing that for a while. But second of all, in this screenshot, in this snapshot, all these little red down arrows, that indicates that the price has been decreased on that listing. So in this particular snapshot, it's just a random sample size of a bigger sample, but we're looking at like maybe half of these have had a price decrease. So something's going on out there, and that's going to be an increase in buying power, an increase in negotiating power, lower prices you would have paid if you were in the market for this house and you wanted it and you had an ability to buy it and it was time for you to buy. You would have paid a lot more for it a few months ago. So now you can get it for a lot less, but your interest rate's higher, so your payment will be higher. But there were a lot of people who really wish they bought a buys. Well, you couldn't because a lot of people couldn't, but then those who could, everybody was running away from real estate and scared of it. And then everybody wished they bought then. So I don't know what are we going to, what's our future self? How's our future self going to advise our past self of right now? Are we going to, I look forward to hearing what you think. This is a look at the average sales price graph. Purple line is the top blue line is ADA, the purple line on the bottom is Canyon, and the blended average is the gray line in between. And so it's literally just a picture of average sales prices. September 20 to September 22. So Ada County, the median price of homes I remember presenting what feels like not very long ago and being shocked when the median price of homes hit $500,000. Afford this. How could they afford it? The rates were great. So there's going to be some downward pressure on prices because the rates aren't great. So there won't be as many people able to afford it, but also the increase in interest rates is kind of designed to do that. It's designed to slow things down. Now, interestingly, year over year, we're still up. And we've had 4 consecutive months of month over month median price decreases. But we only have had, if you run the numbers looking only at existing homes, can you find a year over year decrease? But when you're looking at the overall market, which would be new construction and existing, there hasn't been a decrease. So new construction prices are still higher. But look at some of those stats. Days on market up 100% from last year.
Which isn't a bad thing.
It was going too fast. Yeah. Inventory up 100 or 94% from last year. And again, it was making a frenetic market to have no houses, no days on market. People were making huge buying decisions with very little time to do so. And then the number of actual sales is down, pushing a third or so. Now, when we add Canyon County into the mix over here, that median is around 427,000. So that's our median price of homes in Canyon. Days on market up more than 100%. Inventory not up quite as much, but still up 2/3. And the number of homes again down more than a third. Let's see what this next slide is. Okay, so here's what the sales price has been doing and the percent change. The blue line here is the actual percent change in median prices, and the gray bars are the median prices. And this is September 2022, and we started looking at this in January 2019. So you can see that the median prices were creeping up, creeping up, creeping up, and only just fell in the past 4 months. But what's really drastically fallen off is the difference, the change, the percent of change year over year. That growth has calmed. And a lot of us said it was unsustainable. How long can you have double-digit appreciation? And so that's where we're finally finding the end of double appreciation. So after peaking at 44% in May of 2021, that was our peak, annual price growth has trended down and slowed significantly. Low mortgage rates drive demand for housing by increasing buying power. And the opposite is also true. And so the average 30-year fixed mortgage was 6.7% at the end of September this year, compared to 3% September last year. So the interest is the story. So the efforts to reduce the inflation are definitely having major impacts on the housing market. And this is pushing down on sales, pushing down on demand, and it's giving inventory a little bit of time to accumulate with that change in demand and that buying power. But buyers aren't facing fierce competition. And if rates drop in the future, this is I'm kind of summarizing some Boise Regional Realtor stuff here. And if rates drop in the may opt to refi and save on their monthly payments. And additionally, they have the negotiating power. So if we're talking about negotiation, let's look at sales price versus list price. This is in the residential income category, and I only ran one because when I ran it in residential, the lines look the same, very similar. So you can see that in fall of last year, we finally got a seasonal cool down last year. So when we finally got our seasonal cool down a little bit last year, prices were maybe hitting around 98% or so of asking. And then when we got to April and spring, you can see prices were pretty much at asking. They were right there. And then now we have a little bit of a dip And I think we're technically in residential, we're at 92.5% of list price is where the deals are being made. So a little bit less. So for buyers, I encourage you, if there's a property you like, we can still look at it. Let's look at days on market. We don't have to come in at full price. You know, we watch above our price point to see what's going on when we're watching the market. We've always bracketed, but 6 months ago, a year and 6 months ago, we couldn't count on something coming down. It was just nice to know what you couldn't afford. Now, maybe you can make a play for something that's higher if that's the one you like. Here is building permits. What's going on in the future? What's being built? How are these laws of supply and demand and inventory supply, how's this going to affect what we actually have available in our valley? Here's the building permits. 58% decline since August, 73% decline since last year in the residential category, according to Pioneer Title. However, I called Hubble because we've done a ton of new builds with them, and they said they've got 400 homes in process and 260 are spec. So they don't have buyers for those 260. They're just building them and throwing them out there on the market. They're going to stop building spec homes for a minute until they catch back up and get those sold. They were starting 4 homes a day. They're going to chill out. They're going to start 1 home a day. And they plan on boosting this back up to 4 a day in January. CBH is also working through the existing permits, according to the Ames County, Dan Curtis, one of the appraisers. He's like, yeah, they're chilling out, but they're not really hunkering down for a long haul. They're taking a pause. I don't know. Apartments are still underutilized, according to Ron in the commercial side of things. And so what they're saying is other cities of our size can handle a lot more apartments, and they have a lot more apartments. And so we specifically had an AVID investor ask 2 months ago, what's going on with all those apartments we're building and how is that going to affect vacancy? And so far it seems the general consensus is we're underutilized. Our market can handle more apartments. The apartment building permits haven't really been affected or changed. They're still doing it. No slowdowns. So the interest is a huge part of the story, but that's why we have this topic tonight. Here's what's going on in duplexes and fourplexes. Ada and Canyon County are multifamily properties. The inventory has jumped up. Pending deals are up. Sales are steady. But if pending's up, sales will be up next month. And absorption is now under 1 month for fourplexes and over 1 month in duplexes. So these numbers are still sellers market numbers here. Yeah.
What do you mean by absorption levels?
If we take, I always have a hard time explaining it, but if you, at the rate that houses are currently selling, how long would it take to sell everything that we currently have on the market? A 3 to 6 month is a balanced timeline on that. And that's like the right answer, the balanced market. Anything under 3 is a seller's market. It would only take us a month to burn through all the inventory we currently have.
Got it. Okay.
A 3-month answer would be better. So these multifamilies are actually, and so there was one multifamily, a client called me about it on or emailed me about it on Saturday. And I was like, oh, I'll check it out on Monday because everything slowed down. I thought I could breathe. No, that one went pending. So the investors are still moving, not quite as quickly on all of them, but if you underprice something, they're going to jump on it. So the gross rent multiplier, this Tony Drost graph is, he mentioned that it's skewed. We need to be careful with it because there were only 2 fourplex sales in September. So how do you do a big graph off of that? Well, we can just look at the overall trend line. That 6-month average trailing is the red line, but the gross rent multiplier has been pushing lower, which is better for investors, worse for sellers, better for buyers. Although this last month we had a couple sales that really threw the cap rates up there. This last month. So our cap rate, 6-month trailing, went higher. It got pulled up by this sort of data anomaly we had this month, but it has, as you see here, we were at that 4% mark for quite a while. For quite a while, our 6-month trailing cap rate was 4, and that has gone up. And here's what it actually looks like. This is what's active in fourplexes right now in Ada and Canyon County. Spiceland is newer, a newer property, ski jump, brand new. Lots of stairs, brand new property, looks cool, lots of them around there. And then on the other end of the spectrum, Sugar is like a house with some converted units in it in Nampa. Nothing super compelling. And only one down arrow. And only one down arrow on these 5+, which is a harder category to fill in this market. We definitely don't get as many of those 5+, which is why I was kind of excited about the Colorado Avenue property and why I printed that pro forma out for you, because I like it that it's taking and kind of looking forward on cap rates and not trying to squeeze you down to a 4 cap, even though 16 units are rare. As opposed to the Boise version on Overland, which is 15 units, but not built. So yeah, that's what our market's doing. Any questions on that?